a massive 2,433% upside in a fintech company? You heard it right. I believe I just found a massively undervalued company that not many people have their eyes on. The company, OppFi, ticker symbol OppFi. This fintech company is making waves in the financial sector, and in this video, we're going to explore why this stock is worth your attention. First, we're going to talk about who OppFi is. Then we're going to do some SWOT analysis. After that, you're not going to want to miss it. We're going to talk about my high five snapshot, which will tell us exactly what the fair valuation of this company is with a conservative outlook. Finally, we're going to be talking about the technical analysis and where I see this company as a great buy and where I could see a big bounce and move higher. So let's get into it. So who is OppFi? OppFi is a tech-enabled specialty finance platform that broadens the reach of community banks to extend credit access to everyday Americans. Founded in 2012 and headquartered in Chicago, Illinois, OppFi focuses on providing financial products to undeserved consumers, helping them build financial health through transparency, responsible lending, and financial inclusion. OppFi supports consumers who are turned away by mainstream options, offering them affordable and transparent credit solutions. Their mission is to empower consumers by providing financial products that cater to their needs, ultimately helping them achieve financial stability. The company leverages advanced technology to streamline the loan application process, making it easier for consumers to secure funds. They offer a range of products, including personal loans, credit cards, and other financial services designed to meet the diverse needs of their target market. OppFi is founder-led by Todd Schwartz, who has been instrumental in shaping the company's vision and mission. Todd founded OppFi in 2012 after witnessing firsthand the challenges faced by undeserved consumers in assessing credit. His dedication to financial inclusion and empowerment has OppFi growth and success. Before we get into the rest of the video, if you find these videos helpful, if you like this type of content, please don't forget to like, follow, subscribe, and comment below what stocks you want me to deep dive next. Make sure you comment that below. Now, let's dive into a SWOT analysis of OppFi. Starting with the strengths. OppFi leverages advanced technology to streamline the loan application process, making it easier for consumers to secure funds. They focus on undeserved consumers with limited access to credit, providing affordable and transparent credit solutions. Their strong mission to empower consumers is a significant strength. Moving on to weaknesses, OppFi faces regulatory risk as a fintech company and is dependent on technology, which means any technical issues or cyber threats could impact operations greatly. For opportunities, OppFi has the potential to expand its services to new markets and offer additional financial products to meet diverse needs of its target market. Lastly, the threats include high competition in fintech industry and economic factors that could impact their businesses. I always love to do SWOT analysis just so I can get a good whole picture of the company and what are the strengths, weaknesses, opportunities, and threats. Next up, let's take a look at the High Five Snapshot Valuation Analysis. High Five provides a comprehensive valuation of OppFi, highlighting its financial health, market position, and a growth potential. According to my analysis, OppFi is well positioned for significant growth, making it an attractive investment opportunity. Getting more into my High Five snapshot here, you can see that we have a current price of $10.70 as of today. We have a 52-week low of $2.25, and this is a less than $1 billion market cap. So just understand that it is a lot more risky than a lot of other companies out there due to its valuation and due to the low amount of shares on the markets. Low amount of shares, basically, we have less than 30 million shares at this time right now. Moving into the valuation and the numbers that I ran here, we have a free cash flow margin rate right now of 55%, and I could see that growing over the last 5 years of this overall 10-year analysis to 60%. We have a discount rate of 10% of this discounted cash flow. We have a terminal rate of 10 for the multiple of free cash flow. Revenue sitting right around 500 and some million. We have free cash flow sitting at a whopping 300 and some million. We have stock-based compensation very, very light, less than 20 million. And we have shares outstanding, like I said, of less than 30 million. And we have a net cash to net debt positive ratio of $200 million. So running these numbers while having very conservative revenue growth, numbers, we currently have 520 million in revenue right now, and that's a 3% growth year over year. And analysts expect a 7, 15, 30, 13, 11, 9, 10, 10, 8, and 6% revenue growth over the next 10 years. And I do believe those are very conservative for this company that's very small and is expanding at a rapid rate across America. Also, when we look at the EPS growth rates, we also have very conservative EPS growth rates. They are currently EPS positive, net income positive, and they are free cash flow positive, as you saw up here. And as such, you have a company that's EPS positive, free cash flow positive, and that just speaks volumes for a less than $1 billion market cap. And sitting here, we grew 69% EPS growth year over year, and we're expected to grow at a small mid to high teens, just kind of scattered around here. But as you can see, even with this low EPS growth rate, it doesn't have to be a lot, as we are very, very undervalued, and it doesn't have to be a lot for us to get a very good deal on the shares that we're buying today. So getting down to the brass tacks, at these very conservative numbers and with this massive free cash flow rate, we are looking at a massively undervalued company. The fair value that I have for this company is a staggering $286 per share, which is just astronomical. And I don't even believe it, to be totally honest. It's hard to believe something could be this undervalued. And at the end of the day, it is this undervalued because it is a very small company in the fintech sector, and they are going after a very niche market. So that is why it is so undervalued, in my opinion, because it's something that they're going to have to continue to hit home runs consistently to maintain all of this. But the good thing about this is that they are so undervalued right now that they don't have to hit extraordinary home runs. I'm saying they have to hit crazy grand slams every time if they want to get to $286, obviously. But to get to, say, $20, $30, $40, $50, $100 per share, they do not have to do something crazy extraordinary because they're so undervalued. If they maintain these growth rates, if they maintain this free cash flow margin rate, and they maintain this net positive EPS and EPS growth rate, then eventually people will wake up and realize that this company is massively undervalued. It's just how things work. You have $200 million in cash. You're pulling in $500 million in revenue, and you have $300 million in free cash flow, while you have a $900 million market cap. That's just silly to me. It's just absolutely silly. I mean, you literally have this almost equaling their market cap right now. So if they liquidated today, after they grab their revenue, threw it to the bottom line, and their free cash flow threw it to the bottom line, you would have a company that's basically, worth itself. Also, jumping down here, you have a free cash flow yield of just a crazy amount, 139%, forward free cash flow yield 133%, a 12 PE, 11 forward PE, and then a 0.18 PEG ratio. So it's a buy. If we were to actually get to this massive $286 value, we would be looking at a 61% CAGR rate. So if we take the 10-year EPS annual CAGR, we would get to 118%, or up to $245 per share. And that would basically bring us, due to this average fair valuation over this time frame with these conservative PEs. So as I was saying before, we would have a $1,262, fair value on this company, which I really don't believe that they would get to something like that just because of their niche market. But again, I'm not playing it for, honestly, this 286. I'm not playing it for that, or I'm not even playing it for the 245. I'm really playing this as this is a very undervalued company. And I believe that they could probably get to $100 per share if they keep these metrics that we see here up. If they keep these metrics up and they continue to grow and maybe expand into other areas, I definitely can see them get to $100 per share. And obviously that is a beautiful 10x, almost 10x from here. And that is what I'm playing on this company. I'm not going to sit here and say these numbers look super realistic and that they're going to reach these anytime within the next decade. I definitely do not believe that. But you have this company that's net income positive. They're free cash flow positive. They have $200 million in net cash over debt. They have crazy low valuations all across the board. It's a buy up and down. And to me, it's low risk just for the simple fact that they are so undervalued. And if we look down to Seeking Alpha's grades, they have an A- for valuation, A+ for growth, C+ for profitability, A+ for momentum, and a C for revisions. I don't know where they're getting a C+ for profitability, as this company is net income positive and expected to grow. And obviously their revenue and free cash flow positive and expected to grow. So that's what I'm seeing on the high five snapshot. Again, I do not believe they will get to $286 in any recent time, but it is a massively crazy number that I wanted to show you all. But again, I still believe this is a 10x or more opportunity with some time. So moving on, we're going to look at the charts here. So moving into the charts, we have a massive rounded bottom. We had this massive move up to about $17.76. And then obviously this past month has not been the greatest. We had this massive pullback with the markets, and now we are retesting. This is where they IPO'd. We are retesting this rounded bottom breakout area, also this volume shelf. And I believe that right here from this $9.37 up to where we are now, I believe in this area, we can see a big bounce if the markets want to play ball, and a move up to our measured target, our measured move of this cup and handle, up to $21 per share. An absolutely massive move from right now being at a little over $10 per share, because that is essentially obviously doubling us up on our investment. It's a straight double up. And the charts say it's in a really good spot to basically bounce and move higher, coming back, retesting previous resistance, flipping it into support. Obviously the valuation's telling us this is a buy all day. And just overall, when you have trading and investing meet in the same area, and they're both kind of screaming the same things here, I tend to listen and make moves based off what my strategies on technical analysis are telling me, with the high five trading strategy here, with this indicator that I coded, and also with the high five snapshot trading, with the high five snapshot strategy of investing and understanding the fundamentals and being able to deep dive through financial statements, so on and so forth, and just understanding the company and how, being very undervalued and then having a big area to come pulling back to where you have this strong support and flipping it from, previous resistance into support, and how that sends stocks higher, honestly. So that's what I'm seeing on OppFi. Again, I hope you enjoyed the video. And if you want to join a community of like-minded people where trading and investing meet, like I was saying, join the High Five community. Together we can achieve our financial goals and grow as traders and investors together. The link is right here if you are interested. That's all I got for you all today. I hope you enjoyed the video. Again, if you want more content like this, you want more deep dives, if you want more stocks run through technical analysis, or you want more stocks run through my High Five snapshot, drop a comment below letting me know. And until next time, friends, I'll catch you in the next one.